Oh, hey. Didn't see you there. Welcome to Trey's Trades, where we talk quickly and eat Subway frequently. How are we doing, baby? It is your boy Trey from Trey's Trades, coming back again for another freaking video. I'd like to preface by saying that I'm not a financial advisor or expert, so please take what I say with a grain of salt. Let's get into the video. Today, guys, I'm rocking a freaking nice Hawaiian shirt. I picked this up before I went out to Miami for the weekend just to hang out. And you know the deal. We always wear those freaking deep V cuts. I don't know, I've got my collar pop kind of goofy, but I thought it'd be funny. So whatever. We're gonna give you the AMC update here for the day. And we're going to go over a couple different things. We're going to do the technical analysis, give you the Ortex data, the short volume percentage ratio. I also want to go over Stocko Tracker, it shows you the call options that are currently in the money, about how many shares are available to borrow. All of this you need to know, take with a grain of salt, because this is just reported data. This is a rough estimate, and I think a pretty conservative estimate, but it's important to consider because it gives you sort of an updated idea of the trend of where the stock is going. So we're going to keep this nice, short, simple, sweet, to the point, so you can go on with your day. So let's just get into the video. Now, the cool thing that I've noticed here is that the Ortex data, you've got two things that are starting to go back up. Actually, three things. The shares on loan is up to about 97.87 million shares, which is a 3.57% change from a week ago. Now, this is interesting because if you look at the short interest data, or the short interest is only up about 2.53%, meaning that the shares on loan, which is essentially not necessarily shares that are shorted into the market, they could be, but it's essentially what lenders have out on loan, and then these people who lent out the stock and are holding the stock are just holding it and or shorting it into the market. So I bet you there's a little bit of a discrepancy between the short interest and the shares on loan. This is something that has happened in the past, and Ortex has actually had to correct the short interest of free flow, and you can see it with these huge spikes. So you had it from 13.7% all the way up to 18%. There's like a 4% sort of differential here in terms of what was actually happening with the shares on loan and the short interest estimate. So once you get that updated FINRA report, the last one was on the 26th of July. You're going to have your next one come out here in another 2 weeks. I'd be interested to see what that number actually looks like. But 15% short interest, nice conservative, 85% exchange reported data. I wouldn't be surprised if it's higher than that, but we have to give what the table gives us. We have to take what the table gives us and just use that as a floor. Very easily can be 20, 25, 30, 35, 40. Consider naked shorts, failure to delivers, and or any other sort of synthetic shares that are out on the market that should not be there. But that's pretty interesting to see, as well as utilization starting to go back up as well. 89.83%, 2.93% change. Now I'm going to say something that I think is important that's not very highly talked about, and it's that the last time you saw huge squeezes up on the stock, you saw that the utilization was maxed out. The utilization was super high. It was at 100% for a very long, prolonged period of time when we got that push up to $72. Now, there's no such thing as coincidence in the stock market. I think that everything happens because of some sort of turning point or pivot point or any, there's causes to everything. So to see that next huge push up to $77, beyond, you're going to want to see that utilization go back up because that creates pressure. It creates a lack of supply, which is going to increase demand. Now, the odds of naked short selling happening when the utilization is not maxed out is, to be very blunt, very simply, put, not very high, because you need the utilization to be maxed out for people to want to create supply. Because if there isn't supply, you either have to pay the extra demand or create supply to lower demand. So probably not a huge amount of naked short selling taking place right now, and you're going to see more of that happen when the utilization is maxed out. Like this period of time right here, I bet you there's a piss ton of synthetics that are happening in that 100% utilization range. So as we continue to inch closer and closer and closer to that 100% utilization zone, that's going to be a good thing. Are we going to see some sort of huge, massive push up to 70, 80, 90, 100 bucks in the next week? It could happen, right? But there needs to be that slow buildup, and that's the phase that we're in right now. The utilization is going back up, shares on loan is going back up, short interest is going back up, and you're starting that slow stair stepping up, right? Higher low, higher low, higher low, higher low, just like we talked about in the last AMC update video. Now I want to go over Stocko Tracker here really quick. He just loves playing in the cat box. I don't understand you, Titan. You were such a goofy cat. Why are you playing your own shit? So we're going to show you Stocko Tracker here really quick, and this is a pretty interesting thing to see. The shares available to borrow is actually pretty decently low. So there is a lot of lenders that are lending out stock right now, and I think that number is actually starting to increase because that shares on loan is so high. We're going to come back to this. You can see there's 97.87 million total shares on loan, but only 76 million total current short interest. So as that number continues to go up, the shares on loan continues to go up, there's more availability for borrowing, which is going to increase that overall Stonko tracker number, right? The total shares available to borrow at any given moment in time. And keep in mind too that this is just a trend. It's not the exact number. I can guarantee you, nearly guarantee you, there's actually less or more shares available to borrow just based on the fact that this is reported data, and we know, just look up FINRA reports, there's a whole bunch of bullshit out there in terms of what's actually happening. They get slapped all the time. You look at the daily short sale volume percentage, and it is just kind of flatlined, right? It's doing a little bit of this trading sideways. Outside of this little bit of a parabolic bump up to 57, 55, and 55, you got 40, 39, 40, 42, and 42 in the last 4 trading sessions. So kind of doing that back and forth, sort of that flat line, sort of baseline zone. And I think the reasoning for that, if you look at the last 4 days, we're in this sort of turning point, right? So you got this pretty massive sell-off in the last, I would argue between the 29th of June all the way down to about the 15th of July, you got a sell-off, right? That was pretty harsh. And I mean, if you want to look up a short ladder attack, you want to see what picture perfect high frequency algorithmic trading looks like, it's this bullshit. That is the most stupid, unnatural sort of price move that I've ever seen. And after we got that pretty solid technical bottom out here, that $32 mark like we were talking about, now it's that turning point, right? It's finding that comfort zone between 32 and 40 bucks. You got that nice push up to 45, and until it gets out of this sort of pennant formation that we're in right now, it's gonna do that trading sideways stuff, right? Shorts don't know which direction this is gonna go yet. Same as, I'm sure some longs out there, some of the apes don't know which direction this is gonna go yet. So I anticipate you're gonna see more shorting as this continues to go up in price. So you have to keep in mind that shorts have less to gain the lower the stock price goes. So they're probably not attacking this as heavily as it is right now. There's more to gain for them as it gets higher in price, which also increases how much there is to gain for the apes as the price starts to get higher. So that's kind of what you're looking at right there. Titan, you want to know a little story about this shithead? I love you, dude. You are such a little goofball. I don't even need an alarm clock anymore because this freaking cat, he'll always wake me up at 3:30 or 4 in the morning. What he'll do is he'll freaking swipe me. He'll swipe me in the face. God, what are you doing? How'd you get yourself that tangled up? Come here. He'll always get himself up in like 3:30 or 4 in the morning, and he'll come up and he'll sit on my chest just like this, and he'll side swipe me right in the face. Like he wants to, like he wants to fight or something. It's just hilarious. I always get a kick out of this little dude. He's funny. He always plays with my cords too. So to give you a brief rundown on the technical analysis, the big things that I'm watching for, and as I kind of talked about in my previous videos, is this slow stair-stepping effect up and up and up and up. So I drew this out on my last update video saying, hey, I think we're gonna get a nice push, followed by a pullback, and then followed by another push. And that did happen. It didn't follow the line to an exact T, but the trend is what I was talking about more specifically. It is just maintaining overall that big sort of trend that we have seen on the stock price. And they do have a little bit of a head and shoulders pattern here, which in and of itself is bearish, but you have the exact opposite thing, so it kind of evens itself out here with this ascending upside level of support. It's starting to stair step higher lows, higher lows, higher lows, higher lows, creating this overall pennant formation. If it were to happen today, what you're watching for is a break over $40.60 as a hard zone, and you can give yourself probably about a 20-30 cent leeway. So we'll just drop a little box here. And if you got to push over that 40-60 mark, I would anticipate you're going to get a retest of that $45 mark. So that's something to watch for if it was to happen today. We are currently down about 0.16% in the pre-market, but that's just if it was to happen today. Nonetheless, what you're watching for is this continuation of trend of these higher lows setups, right? What you have here as well is the 15 MA and the 200 EMA. The 15 MA is this blue trend line, 200 EMA is that purple trend line. It's essentially just a microscopic and a macroscopic trend line, giving you an idea of the overall price action on any given period of time. So what you want to see is that 15 MA to hook back up towards that 200 EMA, meaning that the microscopic or 15-day price action is more bullish than the previous 200 days of price action in that given moment of time. Titan, you silly chicken. So that's another thing that you're watching for. Overall, though, guys, this is in a pretty decent spot. It's still setting those higher lows. You're in the middle of that turning point in terms of the end of the bear cycle and the beginning of the next bull cycle, right? You got to get that sort of trading sideways fluff in the middle, which is where you are right now, until you get out of this overall pennant, formation. Break this descending level of resistance with those 3 touch points. 1, 2, 3, 4 different touch points here on that downside trend line. And once you get a break over that, that's where you're going to watch the next big push over 45 bucks, 50 bucks. But the trends, my friends, this is the things you want to watch for. Rips followed by consolidation. And consolidation is not just doing the flat line. That's not healthy price action. It means that the stock pulls back. Pullbacks are okay. That's part of the process. Red days are part of the process. And if there's any reminder that I want to give to you guys, it's this. There's no timeline on the squeeze if you don't set one for yourself. Now, what do I mean by that? Call options. If you're gonna play call options, first off, know that they're risky. There's nothing ever guaranteed about the stock market. And secondly, don't set a timeline for yourself on this squeeze. Have a game plan. Please, if you're gonna play weekly expirations, I hope that you're a very experienced trader, because that's not something I would recommend, especially given how much the stock varies on a day-to-day basis. But please, there's no timeline on the squeeze if you don't set one for yourself. Stock doesn't expire. And that's what I've got for this video. So blah, blah, blah. I know this drop like a sticker on the room, friends. Catch you on the next one. Light taps always. Much love. And peace.